Great, thanks. And welcome to Global Cash Analysis, a Microlending Essential. And I would love to introduce Susan Brown to everybody.
Thank you, Heidi. This is Susan here. Welcome everyone to Global Cash Analysis, a Microlending Essential. Let me go over what today's agenda will be. I'll speak just for a few minutes about the 5 C's of credit. I'll then do a Global Cash Analysis Basics, just sort of introduce the topic and what it's about and some elements of it. And we also have a spreadsheet, which I noted in the chat box if you saw. Your invitation has a downloadable spreadsheet in it, and that's the spreadsheet I'm going to be showing and using today. But you can download it now or after the meeting so that you have access to it yourself. If we have time, which I suspect we will, I'd love to introduce some cash management strategies that part of what happens sometimes with Global Cash Analysis is we find our borrowers, our businesses don't have sufficient cash to cover a new loan payment. So if you are working with clients who are looking to try to qualify for a loan and do not have sufficient cash flow, there's some cash management strategies they can implement to better position themselves to qualify for a loan. And then at the very end, we would just like to talk about our Microlending Essentials course, where we go into this whole topic in much more depth and you actually get practice applying it to 3 case studies, some actual microloan applications. And so we'll give you more information about that at the very end. So I was looking at the list of who's here, and I'm afraid I don't know most of you, but if you're lenders, you're familiar with this, that even though we're doing microlending and microlending looks quite different than traditional lending, we still usually look at the 5 C's of underwriting, which is cash flow, credit, character, collateral, and sometimes capital injection. That last one comes into play more with larger loans. So we're just looking at one of them today. We're looking at cash flow. However, again, if you take the Microlending Essentials course, we actually go through all of these in reference to microlending and underwriting. And I just wanted to say that one of the reasons we've developed this information in more in-depth is because much of the training out there in the field is for larger loans. And if you apply larger loan underwriting standards to microloans, you actually would never be able to approve any. So we were trying to help frame what microlending looks like, which is quite different than if you're doing community advantage larger loans or certainly 504 loans or any kind of larger loans out there. So let's dive in. So what is global cash flow? It's a method to determine a borrower's ability to afford monthly payments for a loan. And the basic formula is we're looking at all sources of money coming in minus all money going out. So it's from all sources, and I'll go over this in more detail, but it looks at both business and personal. And the reason we do this is we're looking for this thing called excess cash. So excess cash is all sources of cash above and beyond all current expenses. And usually with underwriting and microloans, you're trying to see if the excess cash is greater than whatever the new loan payment is. So if you're providing a loan and the payment is $250 a month, or let's just for math it's easier to say $100 a month is the new loan payment, you want to make sure that there's excess cash in this entire picture of the borrower to at least pay that monthly payment. And the standard that's common out there is 125% of the loan payment. So again, if you have a loan payment, a monthly loan payment of $100, you'd want to ascertain that there's about $125 of excess cash in the entire picture of the borrower in order to qualify them on a cash flow basis for the new loan. So one of the things about microlending versus larger loans is there's a continuum here, and there's different standards on how to underwrite loans at the sort of very small end of the spectrum versus the sort of big dollar end of the spectrum. And there isn't any hard and fast rules here, but there's some general things we can say about how it looks different. And on the microloan end, when you're doing very small loans, you're really looking if the borrower can pay back the loan. And that means the borrower's sort of entire business and personal situation. Which is why we look at both their whole household situation as well as the business to see if they qualify for the loan. You also tend to have a little bit shorter time window. You're looking in the past. What's their situation been in just the past 4 to 12 months? So you're looking at the very recent history of the person. Again, you're looking at personal and business combined. You're going to use your quote-unquote financial statements or documents you often use to ascertain whether you want to underwrite a loan are things like bank statements and pay stubs. Those are the types of financial documents that are most common to look at a microloan. And while, of course, everybody I know who does, or virtually everybody I know who does microlending, they do look at credit when available. Most microlenders are very willing to accept a weaker credit history based on the credit report. When you're looking at the larger loans, and again, this is often where if you take some standardized training out there, this is the type of standards you often get trained on and introduced to. It's more focused on whether the business can pay back the loan. So for example, I sat on a Certified Development Corporation board for many years where we were doing SBA 504 loans, which are real estate deals, and they're usually millions of dollars to well-established businesses. And we were almost always looking at whether the business cash flow was sufficient to pay back the loan. And we only looked at the personal side just to make sure that there was some source of, that there was enough revenue to cover personal expenses. But it was infrequent for us to be looking at personal outside of the business sources of revenue to be able to pay back the new loan. Also, when you're doing larger deals, you look at a much longer history. You go back 2 or 3 years to ascertain whether the business has the capacity to pay back the loan, not just the past few months. Again, you're looking mostly at business profits as opposed to personal sources of income. And you're more likely to use financial statements such as the profit and loss statement and balance sheet, which most microloan borrowers just aren't going to have those documents for you to use. So you can't rely on those documents often to do your underwriting and make your loan assessment. And of course, when you have a large loan, a stronger credit history is required. You're looking for that the borrower has had a history with this size of loan before and has proven that they can handle this level of credit in the past, which usually is not the case with the microloan. So let's get into the particulars of global cash analysis. So remember, we said all income and all expenses. So it's all current business income from the past months up to 1 year, depending on what kind of records and data you can get. Not all micro businesses keep really strong financial records, so you work with what you have. And you also look at all sources of personal income. So it could be that the owner himself or herself has another job. They could have a spouse or another family member in the household who has another job. Maybe there's alimony, child support, rental income, Social Security. You really want to look at all the business income and also all the personal sources of income. So you kind of, it requires you to dig obviously deeper into the life situation of your client so that you can really make sure you have the whole picture of what's going on in their household and in their life in terms of revenue. So what if you don't have, depending on, again, your borrower and the customers and target markets you want to serve, you could have a lot of great documents to ascertain sources of income, or you may be having to get creative about how to determine what income is there. So certainly business and personal checking accounts, if they're available, you can look at 3 or 4 months of those kinds of statements and start to see what kinds of money is coming in, what kind of money is going out, and what some average balances have been and things like that. That can give you a picture of revenue. Sometimes you can also look at bank statements to look at sales, to sort of get a sense of what sales have been in the business. You can see deposits of paychecks, things like that. So all kinds of the bank statements often reveal quite a bit of information about your borrower. You could look at tax returns like the 1040 form or these schedules that are the schedules for businesses, either for the business or depending whether it's a sole proprietorship or an LLC. If they're filing tax returns, you could look at at least the last year of tax returns and find some income information there. Pay stubs are a great way to ascertain income. And there may be some rare cases where you get a profit and loss statement that's reliable from one of your customers. And certainly if they have a good track record of using QuickBooks or something like that and keeping a good income and expense and some kind of accounting program, especially if they use that data to do their taxes, it can be a really good place to look, especially for the past 12 months since they've filed a tax return. If you're looking for kind of an interim income situation, if they've got some kind of electronic accounting, that's the best situation you could ask for. So once you look at all income, you want to look at all expenses. Again, I put business expenses the usual. I am assuming that most of the people on this call are familiar with, you've been working with business owners and you're familiar with the fact that business owners have rent and telephone and advertising and inventory and all of those things. So certainly once you ascertain income from the business, you want to make sure that you deduct all the standard business expenses that are a normal part of doing business. And then you also want to look at the household and personal living expenses. General food, utilities, phone, insurance, clothes. I mean, all the things that we all use, all spend our money on in order to keep our household going. There are some shortcuts you can use to ascertain kind of household needs. I would say, I don't know if you want to spend a ton of time just getting down into the weeds on all their personal expenses, but you want to at least feel comfortable that you have a ballpark figure for what the household needs in order to just keep itself going. In general, business owners, if they have, they will keep their household going sometimes at the expense of the business. So it's good to know, again, not down to the penny, just within the ballpark of what you think that household in particular needs to maintain itself. So ways to determine expenses. Again, bank statements are great. Oops, I'm sorry. My computer's acting a little funny there. Ways to determine expenses. Bank statements are a really good way to do it. If you feel like that's a really good record of all of what money is going out, both in the business and personal. And again, not all micro businesses have separated business and personal. They might be running their business out of their personal account. If they are doing that, it's one of the kind of standards for technical assistance is to see if you can get your business owners to have two separate accounts so that they're running their business out of one account and their personal out of another. But it's still a wealth of information in bank statements to help you understand what the expense situation is. Credit card statements, if they're using credit cards, you can just ask them to show you some of their basic bills, their utility bills or phone bills that are kind of regular ongoing bills for them. And sometimes tax returns. Certainly for the business, there's expense information on a tax return for the business side as well. And then the third element is debt. So you want to try to get a sense of what the current debt situation is for the business and for the household. So this means you're going to look for all credit cards, business and personal, and ascertain what the minimum monthly payment is, how extended they are, like what's their total debt load on all those credit cards, and have they maxed out their credit? Do they have $5,000 credit limit and they've only used $1,000 of it, or have they really tapped it out and they're all the way up to their minimum? So to get an idea of how much debt they have, how much they've tapped out, and what their minimum monthly payment is an important part of the underwriting process. If they have car payments, of course you want to see what their monthly car payments are. If they happen to own a home, you want to look at their mortgage payment. And I don't have it written in here, but usually along with the mortgage payment you want to look at property taxes and insurance on real estate and roll that in so that because those are just, those might as well be part of the mortgage payment in that they're just regular parts of owning real estate. And then we've seen many micro borrowers, of course, have some student loans. So those are the most common kinds of debt you see on. And so then the question becomes, how do you determine what the debt is? Well, the best way is to pull a credit report. So if your borrower has had formal lines of credit, which means either from a bank or from a credit card, standard credit card company, you should be able to pull a credit report on them and find out what their total credit is. And they're, again, a wealth of information to determine the credit status of the borrower. If for some reason you're working with people who are underbanked, unbanked, in a more informal situation, perhaps they have debt that for whatever reason isn't getting reported to credit agencies, then you may want to look at loan statements or bank statements and perhaps get a little more creative about how you find out what their current debt situation is. So this final slide before we turn to the spreadsheet is that, so it's all income, all expenses, all debt, and I just wrote all people. So it's really the applicant's entire financial picture, including the business owner, spouse, partners, guarantors, other household members. Again, it means getting to know rather personally what's going on with the borrower, but this is part of what global cash analysis is you're looking at the whole picture for the whole household. Okay, so I think that's the introduction to all the pieces. So now I'm going to share my screen and go to the Global Cash spreadsheet. It's open on my screen. Hold on, I'll be just a minute sharing it. Okay, can everybody see my the spreadsheet now?
Yes.
Yes, okay, great. So I made this kind of big so you could see it well. I know a little bit of it's cut off. So Andrew, Seiko, and I developed this together, and it's a little bit of a shortcut compared to what we do in the Microlending Essentials class, but it's a great starting point if you don't have a tool at this point to work with. So the way I want to show you how it's set up is this first section right here is all the money, all sources of money coming in. So that's the first little section there. Then of course we see, here's the next section, all the money going out. And then there's this all existing debt section. And then at the very bottom we have some of our analysis. This is sort of the analysis section, and I'll get to that at the end. Okay? So let me go back up to the top here. So just starting here at the top, so I put here net profit from business in this first square, and that assumes that you've already looked at the income, done sort of income and expense calculation someplace on another form. So this would be the net profit from the business. In other words, after they've already taken out their most of their expenses. Let me see. Except I do have a little bit of expenses down here. So so I guess the way, if you look at the way I've set this up right here, that this business has a net profit of $3,800, but we also have to see that they've got a little bit, they've got a rent payment that I haven't subtracted yet, and they've got some debt down below that I haven't subtracted yet. And then just to keep it simple, I said that they have a spouse who has a job on the side, who brings in $3,000. And then over here in this column, column F, it's just a little reminder of some of the forms and documents and places you can look to try to ascertain information. One thing that microlenders do is they have the borrower fill out an application, and usually they ask all these questions. But often borrowers, when they're filling an application, don't always know all the information exactly, and so they're estimating or maybe they're guessing at some of it. So even after you get an application where you ask for all this kind of data, pretty much all underwriters ask for some backup documentation to confirm the numbers. I've had my own business for many, many years, and I couldn't tell you all my income and expense data off the top of my head. I would have to go back and look at my records in order to fill out an application myself. And it's especially for micro businesses that are informal, often and quite informal on a financial basis, may not have totals of things like income and expense every month. They may not have that data, so it will be something you have to spend some time gathering. So And there are some other, lines here. There's take-home pay from the job, Social Security, alimony, child support, rental income, and so on. So there's different places here. And we've created a column where you can have one for the business, one for the spouse, and if there's a business partner or co-signer on a loan. So there's some places to put different types of people who are participating in the overall global picture of the applicant. So again, I kept this a really simple example. So there's totals here at the bottom. And I'll just scroll over just a little bit here. We also have the total right here in column F as well. So then we get down to monthly expenses. So it's actually a little inaccurate what I have up there, that the net profit from the business is $3,800, because it would be $3,800 minus this $1,000. And then we documented a little bit of the household. Again, you can see these are round numbers usually if you want to try to get a sense of what's going on with the household. You don't need to get down to all the details, but just put some broad brushstroke kinds of information there about what you think general household expenses are. And again, we have totals here on line 25 and also in column F. And then again, existing debt. So here's where we start to look at what kind of debt load, and this is quite simplified as you can see. Mostly what we're looking here are the minimum payments for all existing debt. If you take Microlending Essentials, we actually have a spreadsheet that allows you to enter a more complete credit picture of the borrower. So this is a simplified version. In our current example, we're going to assume that neither the business nor the household owns real estate, so they're renting. There's no mortgage payments. And here you look at the minimum total credit card payments for the business and for the household. So that's generally how it's done. And you have to use your own judgment on this, because if your borrower has racked up a lot of credit card debt and they're only making minimum payments, we kind of know that usually adds up to a really challenging situation for somebody where they're maybe not even keeping up with the interest payments. So if you have someone with a lot of credit card debt, it may be a situation where you want to ask them if they'd like some credit counseling, or maybe they want to take a look at their credit card situation if it's gotten out of hand. Because small businesses have a very, very hard time accessing business credit, it is extremely common and appropriate even to use credit cards. It only becomes a problem if it gets to be too much. And then it's quite common, of course, for there to either be a business vehicle and a personal vehicle. We see a lot of, like in the examples we use in Microlending Essentials, we see a lot of student loans, we see a lot of car loans, a lot of credit card payments. It varies from application to application, but those are all very common. And again, over here in column F are reminders of where you can go and look for that data. So as we get down here, this is where we have we let Excel do a little analysis for us. So what you see here in this cell B37 is total sources of income from the above three sections, total expenses from the above three sections, and total existing debt from the above three sections. And so before I go on to analysis, what I did over here is I sort of made up what kind of loan we're looking at to see if they qualify for. So I put in that they're applying for a $100,000 loan at 10% and with 36 total payments, which is 3 years. So that's a number of monthly payments. And this spreadsheet that we developed right here down in this cell, what is this, D46, gives you the monthly loan payment based on what you've put up here. So if I change this to 12%, this number changes, right? Or if I change this to 15,000, where you have this right, yeah, you see this number changes. So let me go back to the $10,000 loan. So here we have all our sources of income, expenses, and debt. Here we have our loan, and let me jump down here, and I'll come back up here to this debt to income analysis. So what we have is that the monthly loan payment is $332, and what this square does right here, which is B46, does the math appear for you and says what is this magical excess cash for you available in this household to make a loan payment. And if you get a green go here, it means that this number here, 430, is at least 125% of 332, which is your loan payment. Remember how I said the magic number for most lenders is that the excess cash is 125% of the new loan payment. So that's what this does for you. And like I said, yes, go ahead, please.
No, go ahead, finish your thought, and then we have a question.
Yeah, then let's take a question. And like I said, if I bump this up to $15,000, what we see is the loan payment goes up to $498, which of course is bigger than our current excess cash, and the spreadsheet gives you a stop sign and tells you that there isn't sufficient cash with this current configuration to cover the new loan payment. Yeah, so
great.
Let me pause and ask questions.
Yeah, I'm going to unmute Terry Guptan. Terry, your hand's raised?
Oh, no, I'm going to pass. You answered the question. Thank you.
Oh, fabulous.
Sorry about that.
No problem.
And then there is in the chat, Susan, I don't think you covered this. Any tips on how to deal with personal debt to family and friends?
Yeah, I think that requires a conversation, a real honest conversation with the borrower. Many times debt to family, especially to family, friends is a little bit different, but certainly to family, when there was that kind of borrowing going on, like when I was doing those 504 loans, it was considered what they called subordinated debt. In other words, the assumption was made that family is patient, family is willing to wait. Family is not going to foreclose on you if you get behind or push comes to shove and you need more time to pay back. So sometimes, in other words, that almost gets taken off the table as an existing debt. But I think it would take a pretty frank conversation with the borrower and perhaps with the person they've borrowed the money from to say, how patient are you? If it seems like the loan has to be paid back, like really for sure paid back, then you want to include it in your calculations. If it's a family member who says, you know, I'd like the money back, but yeah, I'm happy to wait, and I realize they're growing their business, and it's okay if they start paying me in 2 or 3 years, then you could take it out of your calculation, and that's quite common to subordinate it that way. And so what happens is that just in balance sheet terms, you move that debt payment from a liability. It almost gets treated a little bit like equity, like halfway between a liability and equity, so that you don't really count it strictly as a loan. Now, if it's debt to a friend, I would actually say friends maybe aren't quite so patient. I don't really know. That would take a little more research. I think we've all seen situations where a friend has lent money and expected to get paid back in a timely way and didn't, and it kind of got everybody upset. So I think often that's a little different than family. So this is what I jumped down here to this excess global cash analysis because really that is really the meat and potatoes of a heck of a lot of underwriting for microloans. What we've gone over today in a super simple fashion is the biggest thing. And we have this nice spreadsheet that makes it easy to know whether there's coverage or not based on some of those standards I provided earlier in the presentation. In other places, there is this thing called income to debt analysis. And it's quite common to say that total debt should be no more than 40% of total income. Not that many microlenders I know use it. Some do, some don't. It's more common, I think. I'm not sure when it kicks in, but I just thought we thought we'd just put it in the spreadsheet. It's easy to calculate, and to see whether the total debt of this business is under 40%, because the idea being that when you think about it, if you have debt payments that are more than 40% of the total income, it leaves less and less money left over to run the business and run the household. So think, if you just think about it, like, oh, the total debt payments are 50% of total income, 60% of total income. There simply isn't enough money left to keep everything else afloat. So if debt's getting over 40% of total income, it might be a red flag. You might again want to look at the total debt load and start to go, does our loan add just too much burden to this household? It's just another way to look at it, not quite as common as just this straight-ahead cash analysis way of doing it. So I would like to pause here before I go back to the presentation and see if there's any questions. I don't know if we can unmute people. They can raise their hand and we can unmute you if you have a question. Since I'm not hearing anything, does that mean that we're good? I can't see the chat screen. Sorry.
That's okay. Susan, why don't we unmute everybody for a minute?
The conference has been unmuted.
And everybody, anyone have a burning question? I know somebody's got to have a burning question.
Well, I do, Susie. This is Connie Sparks. I just wanted to see, because I'm not able to see your slides, so I wanted to know if the slides presentation will be made available after the webinar.
Yes, we're recording the meeting.
Okay, perfect. Thank you.
Yeah.
Anybody else? Any lenders with a different perspective than I've presented here? Like to chime in and give your 2 cents? There's no one way to do underwriting for microlending, so I'm presenting what I feel is some of the most common practices I've seen working with a couple of dozen CDFIs in California. Okay, well I can go on with the presentation, and if a question comes up, let's just sing out.
Right, hold on, Susan.
The conference has been muted.
Okay. So what are the next steps after the global cash assessment? So if your client has sufficient cash, then you can move on to the other underwriting analyses, which we're not going over in this webinar, but are taught in our Microlending Essentials course if you're interested in learning about the rest of the approaches to underwriting. If the client doesn't have sufficient cash, you want to look at the business to improve profitability and management choices. And that's why I thought I'd spend the last at least 5 or 10 minutes of the webinar kind of going over what some of these cash management strategies are. So that if you kind of have to say no to one of your clients, which is always a drag, but you have something to offer in place. You can say, hey, I've looked at your situation and here are 3 things I think we could do to improve your cash position, and maybe in 6 months we can reapply and make this work for you, which is a much nicer way to have to say, to package your no to somebody. So really the first one, of course, is very obvious in terms of sales and collections, is to increase sales. Many micro-business simply, no matter how well they manage their expenses or anything else, they just their sales aren't high enough. And this is generally a marketing question. It sometimes is also the quality of their product or service. Sometimes micro business owners who are new haven't really got their product or service quite developed enough to have the proper amount of sales. Sometimes it's a matter of marketing and promotion. Not everybody who runs a business is good at marketing promotion. I happen to be not that good at it, even though I had my own business for many, many years and have taken many marketing courses. So any way you can help business owners market. And in this day and age, that tends to be more and more digital marketing. If you don't have those kinds of services in your organization, I really strongly recommend it. It's really how everybody's marketing these days. Very few micro businesses take credit, but I just thought I'd throw it in there just in case somebody is offering credit to their customers. Obviously, if you're waiting to get paid and you're having to bill people, which does happen in certain like contractors and this and that, I don't know, maybe certain kinds of people are waiting to get paid. But waiting to get paid often just means if you may have collections out there that are building up and reducing your whole cash position. So that's why you want to stay on top of any receivables that are there and collect quickly. Again, that's kind of unusual for micro businesses, but it does happen sometimes where there's receivables and a business is offering credit to its customers. Pricing and profitability, maintaining healthy gross margins, and that means that whatever the business owner is selling their product, this is generally for product-based businesses, whatever they're selling their product for, minus what they spent to make that product, that what's remaining is a healthy profit, that they've marked up their products enough to cover all their expenses and have really healthy gross margins. And there's a lot of profit and loss analysis. We've taught actually some profit and loss analysis before where you can help them calculate their gross profit margins and strategize about how to improve those margins. And especially if you do have a product-based business, either retail or manufacturing, helping people understand their gross profit margin is one of the most useful things you can do to work with them financially. Pricing strategies. Again, a lot of small business owners just haven't really thought strategically about pricing. They may be doing their pricing more like, oh, I just mark everything up X% or whatever. But it could be if they have a differentiated product line that certain products can or services can be priced higher than others. You can price things that are a little bit of a loss leader and get somebody in the door, so to speak, and then try to sell them something that has a healthier margin on it. Some business owners think about this naturally, but many don't. So that is something you can talk about. My favorite example of this is I worked with a health food store. It was actually a restaurant, and this guy he just loved the idea of having organic homemade bread, because he went to the store and, like, you look at the ingredients label of most bread, it's full of things we can't even pronounce, and he wanted to just have organic, flour, water, salt kind of thing. But he just couldn't sell a loaf of bread for whatever, $7 a loaf, and make ends meet. So he got strategic and he added nutritional supplements to his store, and he could mark up the heck out of those, and they sold. So his big fat margins were on the supplements, and he had much skinnier margins on the bread. But the bread was his passion and his mission, so it really worked to have that kind of pricing strategy. Another business I worked with is a women's clothing store, and women often came in to buy jeans, and she had very low margins on jeans because that's what brought people in, but then she trained her staff to sell people accessories and outfits that had higher margins on some of the other parts, and that was the way she had a pricing strategy. And then if you have a business that is manufacturing a product, and again, small businesses with small volume, it's very hard to be efficient. But if there's any way you can help the businesses increase their efficiency and purchasing and stuff like that on the production side, that can greatly help, again, their gross profit margins and make them more profitable and hence have more cash.
Susan, on that note, I remember one of our members helped one of their clients become more energy efficient. They're a restaurant, and that was one of the strategies, and saved, I don't know how much money a year. Right. Like it was substantial. It was like $10,000-$15,000.
Yeah, and just think that could be your loan payment right there, right? That could qualify you cash-wise if you could reduce your utility bill. Or in food, for example, again, businesses, restaurants owners who are new to the food business can sometimes have a lot of waste. Their food costs actually get a little out of hand. If you can help them control their food costs, sometimes, again, bingo, they'll qualify for a loan because they're managing their purchasing better. So here's another one to look at, inventory, again, for retail businesses and manufacturing businesses. If they happen to get too much inventory, if they're sitting on inventory that's not moving, inventory is a place where you may as well have cash sitting on the shelf, and can really impact cash flow if inventory is getting too big and not turning quickly enough. Payables. Shop for the best deals from suppliers. Again, hard for micro businesses because often you get deals if you buy with cash or you buy like in large volume and things like that. But anywhere you can help shave off some percentages to help a business be more profitable in terms of buying their own supplies, especially again for retail and manufacturing businesses. Super helpful, super good way to develop more cash on the bottom line. And one way to do that is to build strong relationships with suppliers to try to get credit and again, maybe get some discounts, get some pricing, and certainly don't prepay expenses if you don't have a lot of cash sitting around. Financing. There's a lot of small businesses that just love to go out and buy, big pieces of equipment and real estate. It's really not advisable. It's much better to lease equipment and real estate initially if that's what you need to run a business, because it conserves on cash and it's just a smarter way to go all around. Having a line of credit or a credit card, if used wisely like we talked about, where you're not racking up tons of debt and you're not maxing out all the cards, can be a great way of financing a small business. And you can look at their existing debt. Again, if it's poorly structured or there's too much existing debt, there's a whole bunch of analysis you can do about existing debt, and we don't have the time to do that today. But by poorly structured mean they're using something short-term like a credit card to finance something long-term like a big piece of equipment or inventory that turns slowly. There's certain ways that you can structure debt that really kind of sink a business in terms of their cash management, or like we talked about if there's simply too much debt. And then lastly, owner's draw. It's tough. People are running businesses to support their families and to support their homes, and they need to take money out to do that. But if you feel like the owner is just taking too much out, it would be good to look at it and just say, hey, the business can't afford to pay you $1,500 a month. It only seems to be able to pay you $1,200 a month or $800 a month. What can we do? What are some strategies we can come up with to do that, to reduce how much you have to take out of the business? So let me pause there again and see, does anyone have any questions about either the global cash analysis or any I'd love to hear any ideas you guys have about
The conference has been unmuted.
There we go. Anyone have some ideas that they'd use with their businesses to help them with cash management? Yeah, because I wish I knew some of you better, whether you're actually lenders or technical assistance providers or both. But I would say whether if you're a technical assistance provider, it's really good for you to understand excess cash, because then you can advise people much better when they come in and say, hey, I want a loan. You actually can do some analysis with them from a lender's perspective. And if you're a lender, it's good to know some of this cash management strategy, so that if you have to say no to somebody, you can give them some clues about why you said no and give them some help on where they could take some steps to improve their situation. So really our last slide here is, as I mentioned earlier, we have a course called Microlending Essentials, where you can learn and practice complete underwriting on all 5 C's in depth. And we're going to be offering it in Los Angeles February 20th and 21st next year. And you can reach out to Heidi Pickman right there on the screen if you're interested in that course. And I'm happy to answer some questions right now about that course if anybody is interested and has more questions about it or about anything else we talked about today.
I'll just mention about the course. We did secure a location. It's going to be downtown Los Angeles at Pacific Coast Regional, the SBDC there. So Constance sits on our board, so we took advantage of that. And it's a 2-day full course on how to basically underwrite, and responses from the testimonies. You all will be getting an invitation, are fantastic. Everybody has learned a lot, from TA providers all the way through the lenders. This is for both the audience. Susan teaches it, so both types of audiences will get a lot out of the training.
Yeah, and in the class, depending on who's there, each class has been a little bit different, but we can talk about all kinds of things. If you've got a loan committee question, we can talk about that, because I do consult with CDFIs on the entire spectrum of their loan programs, and we can look at we can talk a little bit about what your loan products look like and how you structure them, what some of your underwriting criteria options are, or what the approval process maybe should look like. There's a lot of elements. We can't spend a lot of time outside the underwriting, but I have enough background that we can have discussions about your programs more broadly too during the class. And I've been a TA provider and a lender, so I've worn both hats in my life, and I think understand both perspectives.
Do we just go through this too fast?
Well, I know it's 10 of. I guess I assumed people would want to chit-chat and have comments or say, hey, here's how we do it at our place or something like that. So it's been a quiet group, so that's one reason why we have a little extra time.
Yep. Great. Well, with the extra time, I think we'll let everybody get back to their work at hand.
I see one raised hand, Heidi. Does Chris?
Oh, yes, Chris.
Yes.
Chris,
Hi, Chris Wilson in Oklahoma. I'm just attending the conference this conference call because I'm just interested in microlending and see if we have such the capacity to do this in Oklahoma here.
What organization are you with, Chris?
With the Bartlesville Redevelopment Trust Authority.
Aha, okay.
So was at a CDFA conference in Dallas last week and just got the information on this. So.
Oh, great. So you haven't been doing small business lending thus far, but you're looking into it.
Yes.
I see.
And have a few other people through the National Main Street Center that are potentially interested in this as well. And so the conference or the training session in Los Angeles may be a good thing to attend for them.
Yeah. The other one, Chris, is I'm also working in one in Minnesota in March, if that's more, I mean, probably,
I think Los
don't know.
Angeles would be much better.
Right? Yeah.
Well, and it's interesting you bring up Main Street program because actually I worked on Main Street program in almost like a different lifetime, but it's a fantastic program. And I'm glad to hear it's still up and running. And
oh, yes. There's plenty all the way across the country. And, again, they're trying to do a little bit more of an emphasis on the economic development side and small business entrepreneurship and microlending. So this might be a good opportunity.
Great. Well, Heidi and I are working on another project called, developing your community's entrepreneurial ecosystem, and access to capital is just one of the elements there. But we're launching where we work with a community as a whole to develop the whole ecosystem that supports entrepreneurial development. So we're adding that to our list of services and knowledge.
Can you send me some information on that?
Sure, Chris. I have your email, so yes.
Yeah,
okay.
And I think you'll, if you're on our mailing list, you'll see some things about it. And we're in the process of developing some publications. I guess they would become publications, right, Heidi, once we're done with them? Mm-hmm. Mm-hmm. Yeah. Okay,
that'd be great. I can certainly get you in touch with the people at the Main Street program as well and see if we can't do some kind of a partnering right there. Because they have to kind of have the same focus as well, just not totally the micro lending part, but I think they could easily get into that.
Great.
Fantastic, yeah. It's great to hear because really, truly, communities need to think about their entrepreneurial ecosystem and the variables involved there, and capital is only one of several. So it's great when a community can come together and look at itself and say, how are we doing on all these various elements of the ecosystem, and where can we make some improvements to help foster a healthy environment for businesses to develop and grow here.
Right. Excellent.
Good. Priscilla?
We have another question. Yeah, go ahead.
Oh, sorry. Yeah, I just also want to, I had the opportunity of attending the Microlending Essentials training before, and Chris was
Priscilla
a really
was a presenter too. Thank you. Hi, Priscilla.
Yeah, and it was a really great hands-on training, and so going through in-depth like case studies that are real-life scenarios, and just seeing how different lenders or different groups approach the underwriting and the assessment of the applications was really helpful.
Yes, thank you, Priscilla. She actually presented at hers because she works at Working Solutions, which is a very strong microlender and has a very strong program, and it was great to hear her presentation on how they go about it. So
thank you, Susan.
Thanks for joining us, Priscilla. All right. I don't see any more raised hands. Are we good?
I think we're good. If you do have questions, you can email either Susan or myself. We're always here to help. I want to thank Susan for this fantastic webinar, and thank you all for taking time out of your day to invest in yourselves. With that, I would like to say we are not doing a webinar in December because it's the week before Christmas. I just don't think that would fly, but we will be starting back up in January. I think it's January 15th with some exciting tech tools that are coming out in that you can implement in your programs. So you can, if you would do yourself a favor and mark every third Thursday of every month for the Cameo webinar. We're holding them at 2 p.m. Pacific time, and we'll tell you to have a great Thanksgiving, and thank you, and we'll see you soon.
Thank you.
Bye, everybody. Bye-bye.
Bye, everybody.
Bye.